Welcome back. Weekly market outlook here today on Saturday the 13th with the European Central Bank brewing next week. Are they going to reduce interest rates even further? Remember last meeting we had a reduction of interest rates. Not expected that is, but we got a couple of other further news events as well brewing this coming week, and those might be kind of quite interesting. So let's go over them right now. What is among the stuff important in markets? Consumer prices from Canada. Well, we had finally last week, and let's recap with the economic calendar how the data came in minus 0.1% on the monthly basis, on an annual basis, even 3% instead of the 3.1%. So downside momentum going to be visible, potentially even further. And with that, we see that there is potential further impactful momentum as well, based on the data from the US, which might fast forward be something interesting for Canada. The Canadian dollar might actually weaken further, and if we are looking at charts, we can observe that currently the market has found a bit of a supportive area. The weekly chart starts to kind of test the weekly 50 moving average. However, on a daily basis, the market might initially start to rise somehow further as the dollar, the US dollar against the Canadian, is about to strengthen further at such levels. So support zone here, and we can mark this in the charting pattern here. Recent resistance turning now into support, meaning the market wasn't able to rise further. When it broke through the resistance area, then we saw now the market finding some support. Again, some sort of support here at current market levels, where else now the market on Friday last week, or this week actually, you have to say, still we are on Saturday here, and the market might kind of continue to rise further. Whether the market is going to go all the way towards the 50 moving average here is the question. That's this one, or going to kind of expect potentially even some further rises here is what we can debate potentially. That said, upside momentum potentially positive. The dollar might rise, or say rather the Canadian dollar might weaken further. This is how it looks like. The euro against the Canadian dollar, again in full swing all the way to higher levels. So we see that there is not too much of an anticipation that the loonie, as the Canadian is called, might actually strengthen. Instead, we could get further weakness should we see consumer prices basically reduced. We might also see the Canadian dollar to weaken. That said, euro, CAD rising, and the dollar, Canadian dollar rising. However, the opposite case might happen as well. Should we see consumer prices basically being as expected or slightly stronger, we could see the opposite, which is basically the Canadian dollar could strengthen, and then dollar CAD and euro CAD might weaken for us to potentially find entry prices, entry opportunities to hop on another rising trend potentially. That's new on Tuesday. Let's ignore Fed's Jerome Powell speech here. He appeared already in front of, he had his testimony at Congress in the US 2 days in a row basically, and not too much further news had happened yet. The dollar's weakness was underpinned by what he stated. On Wednesday, we got similar news from, and we can call this again Canada Consumer Price Index Week. CPI on a quarterly basis finally might weaken as well further in Kiwi Island, New Zealand that is, and again, the same story in the UK. That could offer again some further volatility in markets. The pound recently had strengthened last week, the week prior. So let's observe and check out charts. 2 weeks in a row, the pound, the British pound, was basically able to strengthen quite sharply as the market kind of sees or shows here 1 week, and then this week again 2 weeks in a row, and now potentially being able to kind of break towards the next resistance zone. 130.90, 131 could be the next line in the sand, the next resistance, technical resistance pattern, which might be something worth a consideration. Again, the story happening similarly. Should we see the pounds or should we see the consumer prices basically weakening or turning in lower, this might cause the pound to basically lose some sort of momentum at first. Employment change figures from Australia, not too much of an important story. And the Thursday, next week's Thursday, might just have one bottom line. And that's the European Central Bank ECB interest rate decision. Are we going to see, and we started about it, we're talking about it during our session here today, will we see that rates are being reduced? Technically, it's not expected. So 4.25 percentage points based from the last meeting in June, basically a bit more than a month ago, we saw the European Central Bank reducing rates once. The expectation that there is a further reduction in rates should not be expected at the moment. So there's rather some a kind of unchanged expectation going to happen. The expectation, at least in the refinancing at the moment, kind of not going to offer potential chances, potential changes here. So that is going to be the interesting story. However, we will see potential volatility when listening to Christine Lagarde during the press conference. There is going to be potentially quite a bit of motivation, some volatility going to be expected with the information in regards to how the future outlook is, how potentially the European Central Bank is going to adjust rates, or how Christine Lagarde and her team are going to adjust rates potentially. That could cause the euro to basically weaken as well, right? Look, a downward momentum in interest rates actually would also weaken the euro. We talked about it, the euro against the Canadian dollar. However, against the US dollar, the greenback, the market is in a pretty much strong uptrend. And as we saw it, we'll look into the dollar index in a second here. The market has been rising sharply. And the question is this now a breakout? Will we see volatility in stock markets rising again? Will we see the euro going to gear up potential further momentum? At the moment, based on long-term charting patterns here, we might say, hey, the next line in the sand, 110.30. So there is chances that technically we've seen maybe the bottoming out of this market, and with that bottom, which I talked about just now, might be actually the zone down here, which was already a couple of several months ago. However, the next recent support, this zone has been tested as well, and we might see that the market indeed will kind of start to strengthen somehow further. Then the sideways price action might make sense here, with market motivation we're going to potentially rise somehow further, depending on how the market momentum, how the markets here will go. So that's from the euro perspective. Upside potential, more momentumly potentially will rise further. The euro going to look positive here with upside motivation, depending on a bit the outcome of the interest rate decision on Thursday next week. Not too much going to be expected. The path has been laid out. Potentially after reducing rates, the European Central Bank is going to wait and see on how the consumer prices, how the pressure of inflation is going to ease further before kind of acting somehow in the near future based on those patterns. Precious metals have been on the rise again after potentially correcting momentum on Friday. 2 days ago, or yesterday basically, the market started to rise again further. Looking pretty sweet here. The market might continue to break to higher levels. The upside potential, and that's still from this technical pattern here, the big story. Are these pin bar candles from 2 and 3 months back, are they going to hold the market off and cause them to fall? I might say, okay, we need to see a stronger greenback, a stronger dollar, so that would then pull the market back to the downside. However, in this case, it looks at the moment not too much will be in the way and not too much will prevent the gold price from rising further. Silver, to the other hand, on the other hand, is a bit differently behaving. Silver is looking kind of quite interesting as well. Looking at it from the breakout perspective here, long-term approach, we ended the last month of June quite strongly. We are just about halfway in for the month of July, and that could tell us that upside potential, upside motivation might continue. Upside momentum, at least looking quite positive here, depending a bit on how the market acts around that zones here, how the market acts as well around the recent support areas in plural, because there's quite a few of those zones, quite a few of those zones which could be of particular interest. We have this one, previous resistance, now turning support. We have this one, previous resistance, and now being a current support. And if the market falls, we have the lower area, which coincides with a pivot zone as well, as it looks like here, monthly pivot. Yeah, the market momentum down at 2970, 2975 being quite the important zone, telling us potentially that upside momentum going to happen. So that's in regards to precious metals. Cryptos are trading obviously over the weekend, and they start to resume some sort of slight upside motivation. Bitcoin a bit shaky still, not too much which we might say is going to happen, at least in terms of potential outlook here. It's in a bit of a sideways pattern, right? So a breakout above the high needed in order for this market to break to the upside areas, a break to the downside needed in order to see that this market is going to weaken somehow further. Instead, Ether looking a bit better, falling trend line wise. We see this zone here, which could be the next resistance zone, previous resistance here, previous or current soonish to come support 3290. That zone being quite interesting here. So let's see how the market will go to the upside. I forgot one thing. I think it's about 16, if I'm not sure, 16 billion, 16.3 billion from 16.3 billion funds from former FTX potentially being paid out in the next a couple of months for investors, as the ongoing story might actually even support the crypto markets, be in offering potentially further optimism. Plus, weaker or lower interest rates, especially by the Federal Reserve, might actually also add as a support in markets, causing potentially cryptos, in particular Bitcoin, to rise somehow further. Now, the big story last week, obviously, kind of in terms of the inflationary story, consumer prices were looking to weaken somehow further. Now we see that the rotation, it seemed to be in full swing. Dow Jones rising through the roof. Business partners of mine were saying, hey, my portfolio has never seen such a strong daily gain within the recent couple of years I've been invested in such. Why that? Simply rotation away from tech stocks, the NASDAQ, to some extent the S&P, weaker somehow the German, the DAX, up and running. The Dow Jones pretty much through the roof, we might say. And it looks like that this story might continue. The Dow Jones, as said, rising somehow further. That's what we see here. We got the German, the DAX on top of it. Instead, we have the S&P weaker, and we have the NASDAQ as well, if we put this on the side here as well, looking kind of to form some sort of a stronger resistance area, potentially. Looking at it from the, and we still got it open here, from the Nvidia's perspective, weekly basis, last week basically, or this week actually, I have to say this week offered not much of a stronger price momentum. Instead, a high, a bit of a lower high, could equal to something. We don't have any divergence whatsoever in the relative strength index, but it could actually act as a bit of a stronger price retracement zone here, and which could act and support the market turning back to lower price levels. That's the importance now, and the rotation trade, we might call it here, fueled obviously by interest rates being reduced, namely Federal Reserve, right? So interest rates lower, and if they are being kind of returned to the downside, this helps obviously borrowing costs being lower as well. And on that expectation, the pretty much companies which are not as cash rich as some of the tech companies would cause some uplift, or caused some uplift, which was or is behind the current story that even the DAX looking to be kind of quite positively behaving. Now, this is not a triangle formation, but we see the market finding some resistance by weakening towards a certain support zone in small increments, and now the breakout might happen. The arrow still in from last week, basically looking positive for now. The Dow Jones might actually continue to weaken somehow, to rise somehow further, offering a set of potentially further market momentum here in the next couple of trading days. Guys, that's my weekly outlook here. Rotation trade, equity markets. That's the big underlying story. CPI figures from the Canadian side mainly and the UK. Have those in mind and see how those ones go. Obviously, the number one story, either it's going to be a non-event or not, and I might rather say or not, the European Central Bank's interest rate decision by the wordings. So pay attention to the press conference. We might get further information from Christine Lagarde and her crew. The US dollar weak, Canadian dollar weak, oil prices we didn't talk about right now. The oil market slightly on the downside again, but we saw that last week oil markets were able to rise again somehow further. So we shall see if this trend is going to it's going to continue towards the 84, 85 zone, offering potential further momentum to the upside. See you then, guys. Thanks for tuning in. Have a good one. Have a good trading week as well. Further questions, just ping me.